This material is made available to you by or on behalf of the University of Melbourne under Section 113P of the Copyright Act 1968. It may be subject to copyright. For more information, visit the University Copyright website.
Welcome to Asialink Business's Asia Market Update Series, where today we will focus on India. My name is Mukund Narayanamurti, and I am the CEO of Asialink Business. Before we commence this event, I'd like to start by acknowledging the traditional custodians and the owners of the lands upon which each of us are meeting from, and pay my most sincere respects to elders past, present, and emerging. I would also like to extend a very warm welcome to any participants of Aboriginal or Torres Strait Islander descent. As we are meeting during National Reconciliation Week, this welcome has a deeper meaning. I hope that each of you, like all of us at Asialink, have had the opportunity to participate in activities seeking to achieve greater reconciliation in Australia. I'm delighted that we have such a diverse audience joining us today from all across Australia, the US, Europe, and also India. We have a great mix of investment managers, corporate leaders, policymakers, and university leaders participating in this event. A very warm welcome to each of you. I'm also delighted that we have three exceptional speakers in Ravneet Pawha from Deakin University, Mary Manning from Elliston Capital, and Tarandeep Singh Ahuja from McKinsey & Company sharing their insights with us. I'll formally introduce them shortly. But first, some important context to this event. As many of you will be aware, on the 4th of June, Prime Ministers Morrison and Modi will be engaging with each other in a virtual summit which will focus on defense, trade, maritime safety and security, science and technology, and education. This summit is exceptionally timely given the significant impact of the COVID-19 pandemic on both economies. The Indian economy, based on most recent estimates released on Friday, is now estimated to have grown by 4.2% in the last financial year, the lowest on record in recent years and significantly below the forecast 8.5% for the year. Concerningly, the last quarter of the 2020 financial year has recorded an estimated growth of 3.1%. India's much spoken about revival in manufacturing is also under pressure, with the contribution of the manufacturing sector having decelerated significantly over the last 3 quarters. Australia is facing its largest budget deficits in history, with some firms highlighting that there are potentials for deficits to continue till 2039. According to the Reserve Bank of Australia, the Australian economy is projected to contract by 10% in the first half of 2020, and unemployment is forecast to rise to 10%. This context, when coupled with growing trade tensions with China across a range of sectors, is driving a call for greater trade diversification. This is in an environment of growing nationalism and a focus on rebalancing towards domestic supply chains. All of these factors mean that the virtual summit between our two prime ministers takes on a greater strategic importance than at any other point in recent memory. Both economies have significant structural challenges to manage. In this context, our India economic strategy to 2035 has never been more important as part of national, industry, and firm-level diversification and growth strategies. To help us better understand, strategize, and execute our strategies with India, I'm delighted that Ravneet, Mary, and Tarandeep have joined us today. They will help us understand what we need to do to first achieve the core measure of success in the India economic strategy, which is to grow our exports with India threefold by 2035 to $45 billion. This will be heavily dependent on the international education sector, and in particular, how our universities differentiate themselves from global competitors as they undertake student recruitment, research, and engagement activities. Ravneet will share her insights with us on this topic. Ravneet is Global Deputy Vice President and CEO for South Asia at Deakin. Second, we will also spend time on how we need to achieve the second measure of success in the India economic strategy, which is to grow Australian investment in India tenfold to $100 billion by 2035. This will be heavily dependent on our largest listed companies and super funds learning from their US, European, and Asian peers who have invested significantly in India. Mary will share her insights with us on this topic. Mary is Portfolio Manager with Elliston Capital. Finally, we will hear from Tarandeep on his views on how Australia has been progressing in achieving the objectives in the India Economic Strategy. Those of you who have read the strategy carefully will know that the author, Peter Varghese, thanks McKinsey & Company, and in particular Tarandeep, for his extraordinary contributions in helping build the strategy. Tarandeep will also speak about the opportunity in India for our companies, building on Mary's points, and will also present some of McKinsey's insights on the impact of COVID-19 on the Indian economy. We will also be circulating this research post the event to all of you. Tarandeep is a partner with McKinsey. I'd like to remind all attendees that this session is being recorded. Please submit your questions online using the Q&A button for the in-conversation session later. I'd now like to invite Ravneet to share her insights on the flagship sector and the bilateral relationship, the education sector. Please join me in welcoming Ravneet.
Thanks, Mukund. Hello, everyone. I think we are in different parts of the world, so it's good to be able to talk to you all. I think in these very, very difficult, unprecedented pandemic times, the one thing that is different is that it will change. Things will change, and things are changing at a very, very fast pace. What this has done to our lives and what this has done to education in particular is absolutely unprecedented. Who would have thought that students will not be going to colleges and students will not be going to institutions, and we will have no international students in various parts of the world? In these difficult times, the first thing that comes to my mind is that we have to learn to be really, really resilient. And I think that the one big factor that education does is teaches us all to be resilient. In these difficult times, the one thing that I think also I do see over the years, my experience with Australia and dealing with Australian education is about 25 to 26 years. Last year, Deakin celebrated its 25 years in India, and I've been part of this journey for the last 25 years. The one thing I feel about Australia and India relationship right now is that it is at its really good part of the relationship at the moment as we speak. And we just need to ensure that we continue to build from strength to strength. And international education, in my view, is one of the key aspects that is going to drive this, this fast-going relationship between the two countries. As per the Ministry of Human Resources in India, India's higher education student population is close to 40 million. It is the second largest population for student community in the world. With a huge market potential and with more than 50% of this population below the age group of 25 of India's population, India is a big source of engagement and interaction and student community growing so for the rest of the world. Also, with this large and growing young population, demand in India for quality education is increasing. And I think in these COVID times, one has also seen that what are the different ways through which one can engage and one can relate to international education. I'm going to talk to you a little bit about the challenges initially, and then I'm going to talk to you about my own experience, about how and what has worked for Deakin University in India, and then maybe touch a little bit on reference group, on the India reference group and the India economic strategy, and how we can embed all of that into making sure that this international education sector is well focused and growing. So in 1994, Deakin University decided to set up office in India. We were the first university from anywhere in the world to initially think about setting up in India. And the reason to set up in India was to engage with India, be with India, and see how we can grow our online and skill development programs in India. This, folks, I'm talking about in 1994. And we were the first university to set up an office. It took me about a year to set up an office in India because it was never done before. No other university had done this. And it was a journey, which was a difficult one because there was no clarity on the rules and regulations. We've come a long way from that. And yes, now as we speak, most universities have some form of presence in the India market. But what does that really mean? Presence in India is one thing, but doing business with India is the other thing. I think, and that is what is the most important aspect in my view, and my learnings over this journey has been. In India, when you are doing business, you have to do business with your heart, your head, and your soul. It is not a country where you can do business from a distance. So the first learning to me were the 4 P's over the years that, we have actually witnessed. The first being presence. If you have to do business in India, and education is something which is a very sacred aspect in India. It is not about, it is not seen as an industry in India. And I think that's one thing we have to think about when we are thinking about international education. It is seen as a sacred investment by parents, by students, and by the tutors. So the first thing to think about is, for international education to progress, we've got to think about presence in India. And presence in India is a very, very important part of doing business with India. The second thing I think is that India is not easy. It's a very, very complex country to do business, and it's a very complex country with different rules and regulations, even in the education sector. So persistence is the other thing. We've got to continue to be persistent in doing things as an ongoing basis. The third thing to me is people. If you have the right people that are on the ground, and if you have the right people that you're doing business with, you can get somewhere with India. And that, I think, my dear friends, is an important part to remember, that people and matter when you are looking at India. The fourth thing I think is partnership. Without partnership, if you think that everything can be done just by any one institution or any one part, that's not going to happen. So you've got to establish partnerships, you've got to establish the connectivity, and these 4 P's are almost strategic to doing business in India. I think the other big thing that we need to think about is engagement with stakeholders. And the stakeholders in India are government, industry, and academia. I think looking at all of these 3 stakeholders, Australian institutions need to have a very strategic approach and a very, very collaborative approach about how it can contribute and make a difference to India. At the same time, I think it is important to think about what we do going forward as Australia as a brand. And I think it has been mentioned in both, I think, the India Reference Group as well as in the Indian Economic Strategy, that the more important aspect to think about is, how do we have a strong, collaborative, focused brand of Australian higher education in India? Of course, we understand that Australia is first or maximum second generation in terms of connectivity with India for education, whereas our competitors like US, UK, and Canada are across areas and across generations. So we have to do that much more work to try and build our connectivity, our engagement, and our focus connections with India as we go forward into building the brand. The Indian government is very, very keen to build the education sector in India, because the need is so strong to have world-class universities that even if we built a university every day, we would not still cope with the immense need and the desire for higher education and high quality education. And Australia, on the other hand, has world-class universities, and a lot of the universities being in the top 100 of any world ranking. So how do we actually work through together to see what India wants and to see what Australia can offer is the critical aspect that we have to think about. I think the most important thing is to think about the cohesive brand Australia that we can actually establish. Deakin University, if you look at that as an example, over the years we have been able to build relationships, we have been able to build connections within industry and academia, because all of the time the first focus on mind was what is in it for us together. If you are really thinking about a long-term situation, you have to make sure that India is in that category of long-term investment. It is not something that you can think about here and now only. Of course, you will make investments and you will have to have long-term gains, but at the same time, the journey towards the short-term, medium-term, and the long-term gains is going to be an interesting one. It will not be a static one. It will be a very interesting one, and there will be lots of learnings as you go along with that. I think we've got to really understand that India will always be complex. It is not something where we can walk in and say that I'm going to be, looking at 10 relationships with different corporates and it's going to happen tomorrow. It's not going to happen tomorrow. It is going to be a while before you can really understand the place. Also, India is a relational market. You've got to establish connections. You've got to keep going back. You've got to keep ensuring that you are encouraging people to ensure that they understand that it's a give and take and it's a mutually beneficial partnership that we can establish as we go into the next phase of our engagement. I think universities can establish their engagement in India through various strategic initiatives which can be collaborative with the support of various agencies and government bodies. It is important to understand and to note that Australia has various trends, and the key sectors of engagement that have been mentioned in the India Economic Strategy have shortlisted education and has engaged education as a flagship sector. Now, what does that really mean? When we talk about a flagship sector, we talk about education being a part of every sector that Australia can engage. How do we do that? The first thing I think is to think about deeper research engagement. India is growing its research capacity. The Indian government has come up with a lot of schemes that it is enabling people to build research capability and capacity. So I think what we have to think about is how can Australian institutions work with Indian institutions to help them in enhancing research engagement and outcomes. Australian institutions are well advanced in looking at how research, right from fundamental to blue scope and to commercialization of research, can take place. I think Indian institutions can learn a lot from that, because traditionally the research in India is not in its university sector. Traditionally the research in India is happening in government centers, whereas it's changing now. So in this transition change, there is a huge opportunity for the Australian institutions to partner with Tier 1 and Tier 2 institutions, the new age universities, to help build world-class research collaborations. So I think that is a huge opportunity, with funding available from both Indian, Australian, and various funding authorities. Deakin, as an example, has set up a world-class Terry Deakin Nanobio Center collaboration in India, where we currently have more than 100 scientists and students working together on key themes of engagement, such as energy, water, food security. And I think that one of the key things that that center has done, it's brought together students from not just India and Australia, but even from the region. And that center right now is a center of excellence for the government of India. And I think they are important aspects that we have to think about. The second thing that we have to really think about and understand is deeper mobility and deeper engagement with the academia and the industry. And I think that is also really, really important, because at the end of the day, we have to understand what this country needs and what Australia can offer, and vice versa, what Australia needs and what India can offer. And I think this is a sweet spot where we can work with the academia here to build capacity and capability, and work with the Indian industry to look at how we can help them in skilling. I think skilling is a very important aspect and opportunity, window of opportunity for Australia, because we have a very strong TAFE sector, we have a very strong WIT sector. India needs it. What are the different models that we can think about and engage with here to ensure that at the end of the day, we are able to work through and contribute to the huge, huge sense of skilling that India needs in the future. If you actually look at the India economic strategy and the reference group, the other aspects of engagement that I think we really need to think about is ensuring that we are able to help universities build curriculum and build focus ideas around engagement. So if we are looking at the 10th sector and the 10th state strategy, how do universities pitch in right from the pyramid of skilling, research, engagement, and academic mobility are the aspects that universities can learn on. So I guess what I'm trying to say here, as just to wind up, is that it is an important part of the journey, and post-COVID times, we will have to learn to do a lot of these things virtually. Australia has the strength and the capacity. India needs it. India is ready for it. How do we all come together, and what do we do to ensure that we learn through the journey and we are able to contribute between the two countries and enhance the international education scenario as we move forward? Thank you.
Thanks, Ravneet. Very powerful insights, which I look forward to discussing further during the in-conversation. Again, for those of you who have recently joined, can I highlight that this session is being recorded? And could I also request everyone to submit their questions online using the Q&A button for the in-conversation session later. I'd now like to invite Mary to share her insights on the investment models which multinational companies have executed in India and what Australian companies can learn from them. Please join me in welcoming Mary.
Hello, everybody. Thank you very much for joining us this evening, and thank you very much to Mukund and everybody at Asialink Business for inviting me to speak to you. So I do have a presentation, and I'll just use it as a reference point. So my job at Ellerston Capital, I run two funds. One is a fund that invests in all of Asia, including India, and the other is an India-specific fund where we just invest in Indian companies. And given that background, I have looked at a lot of different business models in India of MNCs that have gone into India and then have subsequently listed those businesses or listed those JVs. And so today I'm just going to give you a little bit of an overview in terms of some of the lessons that I've learned from analyzing those companies. So if you can see on the screen, if we look at the first slide, I just want to make some comments about framing the discussion. So the first is that, as Ravneet said, India is very unique, it's very complex, and it is definitely not the next China. I think given what's going on geopolitically in the world right now, and particularly in Australia, there is some sort of thinking that, oh, Australian and Chinese relationships are a bit tense right now, so maybe we should look elsewhere for a replacement for China. And India is not a replacement for China. I think of it more as a complement, or its completely own story, but it's not the next China. So there's a couple of reasons why the Indian and Chinese economies and the opportunities there are very different. The first is, as many of you know, India is an exporter of coal, iron ore, different grades than is typical in Australia. But nevertheless, a lot of the Chinese development story was built on exporting bulk commodities, particularly iron ore, and that is not going to be the case with India. And so Australia is going to have some different sort of bedrock for developing a strong relationship with India. In the course of my work, I do hear a lot of Australian companies who are very successful in terms of consumer goods. So whether this is wine or infant formula or vitamins or beef, And there is some thinking that if the relationship sours further between China and between China and Australia, that India could be a replacement for that. But it's important to highlight that India is very different. It's at a different stage of economic development. So the price points which are applicable in India are different than what they would be in China. Consumer preferences are obviously very different. And most importantly, the structure of the distribution channel is completely different. So there's no Daigou channel yet with India, but for companies that are looking to get into that market, the simple, find a product that Indians want and export it via the Daigou channel is not going to happen. So given these differences, the opportunity set for Australian companies in India is very different than it has been in China. And this opportunity set will most likely require capital investment on the ground. So the last point I'll make on this slide is that given all this complexity and the fact that India is very unique, and it's not like China and not a market that's similar to what Australian companies have been investing in Asia over the last few years, it's important to highlight that one size doesn't fit all when it comes to capital investment in India. So I have been working with Mukund, and we've identified a lot of different business models that have worked in India. And it's you can see the examples here: majority stake that are listed, minority stake listed, joint ventures, M&A, VC-like investments, and distribution agreements. These are just some of them, and you can see some of the multinational companies that have gone down these routes. So if you flip over to the next slide, I'm just going to give you 3 examples of companies that I have invested in, and therefore I know them quite well, that have been successful investing in India, and some of the lessons that they have learned that can be transferable to Australian companies. So the first one is Hindustan Unilever, which, as you can guess, is the Indian subsidiary of the global MNC Unilever. So they actually started investing in 1888. So this is one of the first points that I would like to make, and it's similar to what Ravneet said in terms of persistence. Investing in India is not something that can happen overnight, and you can see success the next day. So companies like Hindustan Unilever, which now have a market cap of over 100 billion and 8 billion of sales, they've been at it for over 100 years. Hindustan Unilever listed in 1956, and Unilever has a majority stake in the company today. The second point that I want to make is that Hindustan Unilever's return on equity is very high. It's 83%. So I can't think of any company in Australia that has an 83% ROE. There may be some, but none that I've looked at recently. And so India in general is a very high ROE market. For the Ellerston India Fund, we target an average return on equity for our portfolio of 20%, which again, if you compare that to what's available in Australia, that is very high. And in certain sectors like consumer staples, you can have extremely high ROEs. So if you look at the chart on the left-hand side, you can see that in every single sector, this is based on MSCI gig sector data from Bloomberg, every single sector except for materials, India has a higher ROE than Australia. So for companies that are looking for growth, because India, COVID notwithstanding, is a structural growth story to a greater extent than Australia, and that are looking for higher returns, then India is a great example. I mentioned before that part of the things that I'm looking at is, how have multinationals been successful, and what are some of the factors that have led to their success? Because there actually have been quite a few that have failed, and so it's important to take the lessons from the ones that have been successful. So one thing which Hindustan Unilever talks about quite consistently is called WIMI, or it stands for Winning in Many Indias. And Hindustan Unilever did a very good job of addressing the fact that there's diversity in India. So they have this WIMI strategy. They broke India into 14 different consumer clusters, which is not dissimilar to sort of the 10 different aspects which are in the India economic strategy from Australia. There's 14 different consumer clusters, and they have different management teams that manage the tastes and the spending habits and the preferences and the demand in each of those different clusters. So that's something for Australian companies to keep in mind also, that going to India is not a homogeneous thing. There are many different markets within India. So in the interest of time, I will skip over to the next one. Maruti Suzuki is also a company that we've invested in and has been part of the portfolio almost since inception. So Maruti Suzuki is obviously a joint venture between Suzuki of Japan and Maruti from India. I picked these examples on purpose because you can see the first one is a European company, the second one is a Japanese MNC that's been successful, and the last one is from the UK. So Japanese actually made a significant investment in the Indian auto industry in the 1980s. Maruti Suzuki has definitely been the most successful. It currently has over 50% market share. You can see from the chart on the left-hand side, that's 3 times that of its next competitor, which is Hyundai. So the chart on the right-hand side is intended to show Australian companies that investing in India, and if it's via a listed vehicle, can actually be a huge benefit for the domestic stock price. So if you look at Maruti Suzuki, since 2000, in the last 10 years, Maruti Suzuki stock price has outperformed Suzuki stock price by over 200%. So that is very significant. And because, since the 1980s, Maruti has grown to be so big and so dominant in India, it now accounts for around 70% of the parent company Suzuki's market cap in Japan. So investment in India, the point that I'm trying to make from this slide is that investment in India does not have to be a small add-on and it's going to add 2 or 3% to the bottom line of an Australian company. If it's done right and if it's in a sector with strong structural growth, it can be a massive beneficiary, have a massively beneficial impact to the Australian company's share price and to their overall value. Moving on, the last case study I'll talk about is ICICI Prudential Life Insurance. This is another company which we invested in just shortly after the IPO. It's a joint venture between ICICI Bank in India and between Prudential Life Insurance in the UK. They started in 2001, which was a first mover advantage in Indian life insurance, and they were the first life insurer to IPO in 2016. It currently has a market cap of $11 billion. So again, this is a big opportunity. This is not a small cap, and Prudential holds a minority stake. This is a different example than the other two, where the MNC parent holds a majority stake. This is mostly because of the regulation around insurance in India. But it's important to highlight this for Australian companies that are looking at India, that there are a lot of regulatory concerns that need to be taken into account. And Prudential is an example of a company that saw the benefit and the lack of penetration in life insurance in India, and they worked with the regulations to find a structure that worked for them and worked for their partner ICICI, and it has been very successful. So the points I want to highlight mostly about this chart is on the left-hand side, and this is the expected 3-year average EPS growth. So again, there's a lot of lack of visibility because of COVID, but prior to COVID hitting, the Indian economy was growing, around double, even though it had come off a bit, double what Australian country GDP growth was. So this, to a large extent, translates into EPS growth for certain countries, for certain companies. So ICICI Pru, the 3-year forward average EPS growth is 15%, whereas Prudential UK is only 4%. So if you invest in India and if you do it correctly, it can be very accretive to the growth prospects of your company. And you can see from relative stock price performance that ICICI Pru has outperformed the parent since it listed a few years ago. Okay, and then just moving on to the last slide. I think it's important to highlight why engage with India now, because there is a lot going on in the world. A lot of companies and have just sort of drawn inwards, and it's important to make the case for why looking at India now. I think one thing which you may have heard in the news, which is really exciting from my perspective as a portfolio manager of an India fund, is the amount of investment that's going into new economy stocks in India. So about 2 years ago, Walmart acquired a company called Flipkart, which is the major e-commerce company in India, for about $16 billion. Big global tech companies like Alibaba and SoftBank have invested in Paytm. And then most recently, for those of us who are shareholders in Reliance, has been a wonderful thing that Facebook has invested in Jio Platforms, which is the digital assets of Reliance Industries, the biggest listed company in India. So Facebook, has put a big investment in Jio, and it's interesting to me that at this time, when there is so much going on in the world, that some of the biggest tech companies in the world are looking at India and they're getting their foot in the door. I think this is something that other companies, whether they're in the tech industry or elsewhere, need to take on board. That India is getting too big to ignore, and you kind of need to get in early. The second thing is that the Indian government and Prime Minister Modi have taken the view that the tensions between the US and China will result in a one-time reorganization of global supply chains. So this is one of the reasons why there was a corporate tax cut in India last year, because they wanted to harmonize tax rates between India and other potential destinations of FDI. They don't want to be left out of this global supply chain reorganization, and they're actively courting FDI at both the national and the state level. So for Australian companies that are looking to invest in India, this is a good time. Thirdly, the Indian economy is weak due to COVID, and I think we'll hear about that from the next speaker. And in my view, there has been a number of serious policy mistakes made in the last year. However, we have a very long-term view of India, not dissimilar to the 2035 view. We think that India is a market that you want to be in for decades to come, not months to come or weeks to come. And so when I'm looking at my portfolio, a lot of stocks have come off a lot. The Indian market, the Sensex and MSCI India are down about 17% year to date. There are certain stocks which are very attractive and they're down 30-35% year to date. So this is the time when you want to be doing a lot of work. I'm underweight India in the Asia fund, and I have pretty high cash in the India fund. But this is the time when we're doing a lot of work, because there are going to be some amazing business models that are available at very attractive prices. And then lastly, I'll just sum up by sort of circling back to the beginning point, which is India is not the next China, but there are very attractive opportunities for Australian businesses in a number of critical areas. And they're not going to be in exporting iron ore or exporting infant formula, but healthcare and infrastructure are two of the areas which could be a very big opportunity for Australian companies. So with that, I will turn it over back to Mukund to introduce the next speaker. Thank you.
Thanks, Mary. Very powerful insights there, and a lot to unpack during the in-conversation discussion. Again, for those of you who have just joined, could I please highlight that this session is being recorded, and also could I invite everyone to please submit their questions online using the Q&A button for the in-conversation session later. I'd now like to invite Tarandeep Singh Ahuja to share his insights on progress made against the India economic strategy, any untapped opportunities that he sees, and the impact of COVID-19 on the Indian economy. Please join me in welcoming Tarandeep.
Thank you, Mukund. And hi, everyone. Good to be talking to all of you, and hope you and your families and loved ones are all safe and healthy. So Mukund, let me start with the India economic strategy, where things are at vis-a-vis that, and then I'll come to COVID and its impact on the Indian economy. For those of you who don't know, India economic strategy was the work that was led by Peter Varghese a couple of years ago, taking a long-term view of the India-Australia relationship and looking out to 2035 and saying what could the relationship be and what the economic imperative for that is, what the strategic priorities need to be. The strategy was not just about economics, but if you look at the India-Australia relationship, there are three key pillars that are there. One is obviously the economic imperative, and Mukund touched on the opportunity of tripling our exports to India and over 10 times growth in investment opportunities. In parallel, the second pillar is around the geopolitical aspects of the relationship. As was mentioned by the previous speakers, there is a imperative around trade diversification and the opportunity for India to be a much bigger trade partner for Australia. There's also alignment around the democratic principles of both the countries, defense alignment, so there's a very solid geopolitical rationale there. And third is the people dimension. India is now Australia's largest source of migration, and there's a growing Indian diaspora in Australia, and over 700,000 Indians living in Australia, and that provides a great imperative for not just an economic relationship, but also a people relationship. So the logic is very clear about why the strategy is important. The IES also defined very clearly what the focus of the relationship needs to be. So it's both comprehensive, looking across all sectors of the economy and all economic opportunities, but very focused in terms of prioritizing 10 sectors and 10 states, which need to be the focus for the relationship, especially from Australia's point of view. Education has been identified as a flagship sector and will form an important bedrock of the relationship. And there are three lead sectors that have been identified with significant potential: agriculture, resources, and tourism, all three where Australia has been exporting quite heavily to India already, and the opportunity is even bigger going forward. And then lastly, there are six promising sectors: energy, health, financial services, infrastructure, sports, science, and innovation. So it's a pretty comprehensive look at where all the opportunities are in the relationship, and also very clear recommendations, both from a policy point of view on how this relationship can go forward, as well as suggestions for businesses and business leaders on how to make the most of these opportunities. And I think both Ravneet and Mary touched on several of the aspects of what it would take to be successful in India. It's not, I'll reiterate Mary's point, this isn't like the Australia-China relationship. India has a very different context, a very different setup for the relationship with Australia, but no less important. So that's the India economic strategy that was created a couple of years ago. The progress thus far has been really good on that. There has been great engagement with all key stakeholders. I think Peter Vagizi did a fantastic job at engaging stakeholders on both sides of the Indian Ocean on this topic. Secondly, even with the change in the Prime Minister in Australia, I think the strategy has continued to have the focus and interest from the key policymakers and stakeholders. India, on the other hand, has developed its own version of Australia economic strategy with a very similar focus in terms of sectors, minerals, mining equipment, technology, medical devices, environment, science, technology, food. Very similar overlap with Australia's view of where the opportunity is. And the upcoming virtual summit between the two prime ministers, I think, will, if anything, move this forward much quicker. Thirdly, we've seen increasing business interests on both sides, both in terms of investment funds and super funds in Australia looking to invest in India, as well as companies which are looking to grow outside of Australia and looking at investment opportunities in India. Similarly, I think over the last couple of years, we've seen an increasing appetite in Indian companies also looking to invest in Australia. So it goes both ways. And lastly, I think on the people dimension again, the relationship continues to be strong. As Ravneet had mentioned, it's probably never been as close as it is now. The last sporting match that happened in Australia with any attendance was the World Cup final for the women's cricket with India and Australia playing, and record attendance for a women's event. So it's lots of things pretty close to the heart of people on both sides, and great opportunity there to continue to build that relationship. So overall, I think things are progressing well in terms of implementation of the India economic strategy. However, COVID has been both unexpected and unprecedented in terms of the impact it's had on a whole bunch of things. Let me talk a bit about what we are seeing in terms of the COVID impact in India and the Indian economy, and then come back to what the implications could be for the relationship going forward. So COVID, it's no secret, right? It's unprecedented impact on health and lives of people, as well as livelihood and the economy. In India, the impact started a bit slow because the government quite quickly put an extreme lockdown in. But as the lockdowns extended, the health impact as well as the economic impact has started to ramp up. As of now, I think there are close to 200,000 cases in India, and about 5,000 deaths already. And the economic impact has started to be pretty severe over the last month. About less than 60% of the economy has been functioning, with about 140,000 non-farm workers out of work. And that's, to put it into context, it's about half the non-farm working population. And it's a pretty significant strain both on vulnerable individuals as well as small and medium enterprises and large corporates as well, with no clear end in sight. So it's the situation is tough across sectors. The worst hit sectors probably airlines, travel, hospitality, auto, construction, and real estate, discretionary retails, the kind of sectors you would expect. But in India, these constitute a pretty significant part of the economy, and the impact has been quite severe. As you look forward, it's hard to predict how bad things would get before they start to get better. And really, there are two dimensions on which the uncertainty depends. One is what is the virus situation going to be, how much it will spread, what the recurrence would be, and how effective will the public health response be. And the other dimension is the knock-on impacts of the virus, as well as how effective the government policy response is going to be. And it's hard to be precise about what it would be. If you look at commentators on how bad it could get, the projections on impact for the next year vary from sort of -2% to -10% in terms of GDP growth. By all accounts, it's going to be one of the toughest years we've seen in India. Rough estimates, this could mean about 20% of the economy continuing to be not operating even as lockdown loosens up a bit, which could lead to about 67 million people being out of work. There will also be a significant impact in terms of non-performing assets and bank credit. The risk is, if unmitigated, it could lead to as much as 7 to 14% in NPAs. And then, the personal impact on both individuals and small medium enterprises would be pretty significant. So that's kind of the outlook as it stands today. The situation is obviously evolving on a week by week, day by day basis. The government in India has announced pretty significant stimulus package, like most other economies. So the announcements have been quite sizable, as much as 10.5% of GDP. Details are still awaited on how exactly it will be executed, how effective it would be. The current expectation is, likelihood that there'd be a mixed efficacy leading to about 2.8% fiscal impact over the next coming years. But I think over the next few weeks, it'll become clearer how effective the stimulus would be. In addition to the immediate short-term stimulus, I think the other impact has been the government starting to take advantage of this to drive some structural reforms. So many reforms have been announced in agriculture, power, affordable housing, portable immigration benefits. Again, the details are still being worked out, and I think time will tell how effective they are, but this could be an opportunity for some much needed structural reform in India to make things easier in the longer term. That's the quick overview on sort of what we're seeing in terms of the COVID-19 impact in the Indian economy. Question then is, what does that mean for the Australia-India relationship and the India economic strategy and the imperatives that we spoke about? I think in the short term, it will have a bit of an impact in terms of slowing down the pace because the priorities have suddenly changed. There's a much greater focus on what's going on in the domestic front. However, in the medium to long term, I actually think it won't have a negative impact. If anything, it will be more positive for this relationship. The long-term structural fundamentals in India remain. The fundamental underpinnings of what this relationship is built on, and the opportunity remains. If anything, Australian imperative to diversify trading partners has actually increased. The fact that we are all working remotely, collaborating remotely, means it's easier to now start to collaborate across geographies as well. In India, Australia, there is a big imperative in terms of applications and technology innovation. There's a lot of tech innovation going on in India. And I think that imperative can move much quicker than before. And also, as Mary touched on, this could be an exciting investment opportunity for a lot of Australian funds looking for attractive investment destinations. So in my view, COVID may have a small short-term delay in terms of how the relationship progresses, but in the long term, I think the fundamentals would be strengthened. And also the fact that the two PMs are, investing the time and effort for this a virtual summit, I think is positive for the relationship. Lastly, I'll maybe touch on, what can be done about this relationship and what are the opportunity, how to take advantage of the opportunity for individual organizations. I think structurally, the recipe of what needs to be done about this relationship hasn't changed from the work that was done in the economic strategy. The single biggest factor, I think, is the knowledge and expectation gap in Australian corporates and decision makers about what is the opportunity in India and how it's evolved. And understanding the fact that the other speakers touched on, that while India is a hard place to do business, if you do it the right way and you take the right long-term perspective, it can be a very, very attractive destination and quite profitable as well. That's I think, number one. Number two is there needs to be institutional engagement at all levels, federal, state, businesses, small, medium enterprises, individual people, and it needs to be more coordinated than it has been in the past. And again, I think over the last year, we've seen some positive movement in that dimension. Third is a very clear mandate for two-way investment, which again, I'm pleased to see quite a few of our super funds and investment companies looking at that. And then lastly, I'd say, looking for opportunities for collaboration in different dimensions, whether it be strategic collaboration on defense and geopolitical partnership, whether it be joint research efforts that both sides can participate in, would be some of the key things that need to be done at a structural level. And my last point, just to add on to some of the things Mary was talking about around what it takes for businesses to succeed in India. I had the pleasure of working at Hindustan Unilever before I joined McKinsey 15 years ago. And a lot of the things Mary touched on, were as true 15 years ago as they are now, that the thing that works in India is taking a long-term perspective and really taking the time and effort to understand the local markets you're playing in and becoming local, having a clear local value proposition, investing in local talent, developing your own local identity, and linking that quite clearly with your overall corporate strategy. So it's clear to everybody where India fits into the organization's agenda. And it's clear to the customers and stakeholders in India that you have a long-term strategy and focus. So let me pause here and happy to engage more in the Q&A.
Thanks so much, Tarandeep. Lots of terrific insights there, and we have a lot to cover now in our in-conversation discussion. We have a large number of questions that have come in, so I'm going to do my best to raise these questions, as many as we can, with our three panelists. The first question that I'd like to raise with our panelists, which has come in from one of our participants, is about how we can go from potential to realizing the potential in the relationship with India, and in particular, why is it that Japanese, South Korean, UK, US, and European companies more broadly have been so successful in India, but there's the sense that Australian companies still feel that it is quite challenging to do business in India? And as part of that question, Mary, if you can respond, and then perhaps Tarandeep as well, share your views on what is it about Australian boards and senior executive teams from your perspective relative to companies from those other markets that you feel, perhaps inhibits their ability to actually do business in India?
Okay, I guess I'll start with that one. Yeah, they're good questions. I think one thing to highlight from my perspective is that a lot of Australian companies have had a very attractive operating environment at home, and so there hasn't been the need to very aggressively go for growth elsewhere. Whereas if you look at the Japanese economy, they have been struggling with low growth for many years now. And the U.S. economy has been looking for new markets for many years now. And so a lot of these companies there's been the pull of India, but there's also been sort of a push from their home market. I guess European and Japanese companies would be more in that category. So it'll be interesting to see how the Australian economy fares after COVID and after the stimulus that is associated with COVID is removed. I think if companies are experiencing extremely low growth at home, that may be part of the impetus that they need to go offshore. I think one of the second things is that there have been one in particular sort of high profile corporate failures in India, in Australia's corporate history, and that has scared people off. It scared people off within the boardroom, and it scared them off. They don't want to be in the front page of the AFR being the company that messed up in India. But that would be tragic if, just a very small sample size scared off the broader engagement from Australian business. And then, I guess those would be the two main points that I would make. And Tarandeep, if you have anything to add, then I'll leave it there.
Yeah, thanks, Mary. I think my reactions would be very similar. First and foremost, I think it's the risk aversion amongst our boardrooms and senior executives. And in most cases, it's not based on direct insights. It's based on, we've seen, XYZ go there and fail. Also, there is a lack of knowledge and understanding about India. the number of Indian origin or people even experienced in India on the boards of Australian companies, you can literally count on your fingers. And therefore, there just isn't enough knowledge in the boardrooms about what the opportunity in India is and what it would take to succeed. You only need to look at any of the companies Mary mentioned or any of the other multinationals and tech players from the US that are operating in India right now and really investing behind that opportunity to see what's possible. But in Australia, we just do not have that knowledge at the moment. And then lastly, I think it's the incentives at the board level. There is a clear incentive to be risk averse and not necessarily go after growth, which could be high risk. Because in India, for succeeding, you need to have a long-term strategy. It's not a 2-3-year game. And if you look at the tenure of our board members and CEOs, it just doesn't incentivize people enough to take such a long-term perspective. So those would be, I think, the main things that have hindered it.
Thanks, Tarandeep. Thanks, Mary. The next question, which has also come in from our audience, which I'd like to pose to Ravneet, is that, Ravneet, you spoke about how education is the flagship sector, which is a sector, therefore, that really impacts all 10 sectors. There are other 9 sectors, I should say, in the India Economic Strategy. And Mary spoke about 2 of those sectors, healthcare and infrastructure, as being high potential sectors in the relationship. Could you speak a little bit, Ravneet, about what is actually driving investment into healthcare and infrastructure, and what are you seeing from an education sector perspective as opportunities in healthcare and in broader infrastructure?
I think the first thing really is about the opportunity around skilling people in the healthcare sector. I think that India really needs a big focus on skilling the healthcare sector. And when I say skilling, I almost see it like a pyramid. Right from the top level to the very bottom level, skilling is an important part, both I think in infrastructure as well as in the healthcare. I think the second opportunity is around research. I think there is an immense need in the Indian system to be able to work through around collaborative research in both these sectors. We've done some work in the past in the health sector, like use of data analytics, use of lean data in working through the hospital sector. And I think now this big struggle, Mukund, for the health sector is dealing with, COVID at the moment. And I think that given the population size, the complexity, and the immense divide in the population, a lot of the tools that Australia has and Australian universities and institutions are already using for healthcare can actually be used and worked through with the Indian sector. I think the other bit is around policy. When you look at public policy, when you look at working through places like the Public Health Foundation of India, I think a lot of support can be given from the Australian end to support the initiatives and public policy matters with the Indian context. So when you look at education, I almost see a pyramid, like I said, with training, skilling, research, programs, even programs, skilling for the future. For example, if we can put together a really strong academic program for health and analytics, and then offer that online with an Indian institution that could train the future generations of India to deal with the healthcare sector. So there are immense possibilities and opportunities here.
Thanks, Ravneet. That's very helpful, and thanks for contextualizing the context of those 2 sectors. I have another question for you, Ravneet, which has come in, which is about the flow of Indian students to Australia, but more broadly, international students to Australia post-COVID. What are your short-term and long-term forecasts?
I think that in the future, of course, July intake is right here, and we are not going to have any international students coming in July to Australia, and that has been a big impact to the Australian education sector. I think that November intake looks maybe not, depends on how borders open up and how policies happen. But I think even if it happens, it will be very controlled and very short term, and a very small cohort of students that might be willing. But I think hopefully by mid next year or by very early next year, we should have the borders open and we should have interest from students. You know, like Mukund, I said earlier, the thing with India is that there is a certain sense of resilience. I was quite amazed to see that we did a survey with a large number of people, a large number of students that had applied to various destinations, including Australia. And 91% of those students said that they wanted to still go and study overseas, maybe defer their plans by a couple of months, but still very, very interested in continuing with their plans to go overseas. So India will always be a source market for international education to various parts of the world because of the need here in the sense that the aspirational middle class wanting to get the very best in the world. And then I think also the lack of a high quality, large number of institutions. So I think those two are going to drive the need for Indian students to continue to look at overseas education, even in these difficult times. And I think this is only going to grow as things change, unless we can work up good models of engagement, which can be more around the blended side of delivery with Indian institutions and partners, which again is a huge opportunity for the international education sector.
Thanks, Ravneet, and good to hear about the optimistic outlook that your survey found. Tarandeep, the next question is for you, which has come in, which is about, do you think that the India economic strategy might actually be too optimistic? Are there some areas that should be reconsidered 2 years on, or are there some new areas that should be investigated?
Yeah, thanks, Mukund. No, I think it's a very good question, and I've been thinking about it and asking myself the question as well over the last several months. Is it optimistic? I don't think so, because I think the opportunity of the relationship between Australia and India is pretty high. And if you look at the 15-year time horizon and you say, can we triple the trade we have between the two countries? Absolutely. I think the opportunity is even bigger than that. So there is a reasonably realistic filter in there. Similarly, on investment, is there an opportunity to become a $100 billion investment? Absolutely, yes. Is it going to happen tomorrow? No. Is it going to happen in the next 2 years? No. So I think the key here is staying the course over the next 15 years and making sure that the gains are being realized as we go on the way. What would change? Is it still the right strategy 2 years in, or does it need to significantly change? I don't think it needs to significantly change. I think the broad framework still makes sense. I think the 10 sectors that have been prioritized still make sense. Within those sectors, the exact nuances of what the opportunity would look like absolutely is changing and will continue to change. So, in education, as an example, with COVID, the way the whole education sector is working today and will be working in a year's time will be very different from how it was before, right? So you may not have the opportunity of as many Indian students coming down this year, but in the long term, can you have a different business model where you are serving Indian students remotely? Is there a different way to think about the way education is delivered, and does that create an even bigger opportunity? I actually think so. In terms of new opportunities that are being created, I think that's an area where there will continue to be evolution as we go, and there are areas which might get accelerated with COVID. Medical devices and remote health being one, technology more broadly and digitization being another one. Lots of Indian tech companies operating in Australia here, and the way they are working, I think, will continue to evolve and change. So I do think there are some minor tweaks that will need to be done to the strategy, and that was always the intention, right? It wasn't prescriptive on here is how things will unfold over the next 15 years. But the overarching framework, the broader recommendations around engagement between the two countries, I think, are still relevant and will continue to be relevant. And the overall aspiration is, I think, absolutely achievable.
I'm conscious of time, but I'm going to ask one more question, which has come in, which I think is a great question in the current environment. And I'll come to you first, Mary, then Tarandeep, and Ravneet, please also share your views, which is in the current environment where there's a real push towards nationalism, we're seeing in countries right across the world, we're seeing in Australia as well, where there is a desire to revive Made in Australia. And the question that's come in is about how will Made in Australia, if it makes a comeback across industries, compete with Make in India? Mary, and then perhaps Tarandeep.
Okay, great. That's a very interesting question. So my team and I have actually been studying this question of make in wherever, not necessarily Australia or India, but make in wherever for almost 2 years now, because obviously there was the trade war, which is ongoing between China and the US. And there has been some thinking in the global community that there's going to be a reorganization of supply chains. So from an overall Asian perspective, not a non-Indian one, we were thinking, okay, if this reorganization does happen, where does it make sense to make things? And make in Australia, frankly, is extremely expensive. So Australia doesn't even make a list of somewhere to make things these days. Perhaps there's some services that come out of Australia, but in terms of actually making goods, Australia is much too expensive. Elsewhere in Asia, for people who are wanting to migrate out of China, obviously China is still very inexpensive from a labor cost perspective, but it does also have a lot of technological knowledge. So in the tech sector, it is difficult to make in China is an important part of the tech sector that's not going away anytime soon in our view. Then when you get outside of China, there are countries like Cambodia and particularly Vietnam, which has been a huge recipient of sort of money going out of China has gone to Vietnam. And some of our conversations in India have been, why isn't India getting any of this reallocation money? And part of the reason is, because there are a lot of regulations and because there's a lot of very strict labor laws, which are turning away foreign companies. So I don't think made in Australia for many goods is really going to take off. Make in India has obviously been one of Modi's policies for a long time, and it hasn't really taken off either. But I think if some of the structural reforms that they're putting in place in terms of the corporate tax rate and getting labor laws more relaxed, and really pushing India as a destination for Europe, because the other thing that we looked at was the transportation differential costs for going to the US. This was mostly in respect to Asian companies, but it's obviously a lot more expensive to ship something from India to the US than it is from China to the US. So the last thing I'll say on this, and then I'll turn it over to Tarandeep, is that India is such a huge market, a consumer market. One of the things we've heard from some of the global tech companies is whether the Indian government says, if you want to sell stuff to our 1.3 billion people, you can actually make it here. So you have seen companies like Apple, there are whispers on the ground now that they are going to be setting up actual facilities in India if they want to sell iPhones there. Samsung has already done it. So I think that sort of make in India to sell in India from global MNCs is going to be a trend that we're going to see in the years to come.
Thanks, Mary. I completely echo all of those sentiments that you mentioned. I think in Australia, we've seen manufacturing decline pretty consistently since about 1960, and I don't think that trend is going to reverse massively anytime soon around this Made in Australia concept. So in the short term, I do think there will be some trade restrictions. There will be a focus on nationalism and local sourcing. But in the medium to long term, my belief is the relative economics do prevail, and they will prevail. And Australia and India are not that far from each other, so I think the economics work out quite well across a wide range of sectors and industries. The other thing is the definition of make itself, I think, is changing. It's no longer just about making something from scratch. There could be opportunities where you are value adding to the same product, partly in India, partly in Australia, as well as other countries. And also the definition changes completely when you look at services. So it's no longer just a manufacturing game anymore. With technology, with services, the line is getting blurred between where is something going to be made. So I actually think short term, yes, there will be implications of the trade wars. Medium to long term, I think economics will prevail, and you will be seeing, if anything, growth in the trade.
I guess from my perspective, I probably agree with both the speakers before, but I think that there is a huge movement in India at the moment as well, with the Indian Prime Minister also talking about, Make in India and stuff like that. And I think that actually Australia and India could be good partners in that, because India could be a more sought after trade partner for Australia now, given the situation. And I think that could bring closer the ties between India and Australia. And having said that, I think that India will have to really gear up to be, if it has to be, a make-in destination for the world, it has to really gear up to look at its own domestic as well as international possibilities. But yes, I do think that it has good potential for Australia and India to work more closely together to support each other through the supply chain possibilities.
Thanks so much, Ravneet, Tarandeep, and Mary, for those really comprehensive insights. I'm conscious of time, so I'm just going to quickly summarize a few really key points that have come out of this discussion. Ravneet, the great success that Deakin has had in India over 25 years is in no small part because of the great leadership at that institution, but also what you've brought for 25 years to that institution, and your view on distinguishing between having a presence in India versus doing business in India, with a focus on presence, persistence, people, and partnerships, is best reflected on the great success that Deakin's had and is seen as really a benchmark for other institutions. And Mary, one of the great reasons why we found in our work that Australian companies have been unwilling to really take the leap and invest capital in India is because they've often lacked an understanding of examples of companies from other parts of the world that have similar institutional structures, of how they've actually driven superior performance and returns out of India. And so your examples of ICICI, Prudential, Maruti Suzuki, and Hindustan Unilever showing the superior return on equity returns will actually be really powerful for very rational and rationally driven Australian managers. So thank you for those very powerful examples. And finally, Tarandeep, very heartening to hear that you remain still very bullish about the India economic strategy, and also for your very thoughtful analysis from McKinsey on the easing of the lockdown measures in India and the likely outcomes as a result in the forthcoming months. We will share your research with all of the participants, because there have actually been a number of questions that you'll be pleased to know we didn't have time to cover on what we can forecast in India as we come out of the lockdown, what are the different scenarios, and what are the likely impacts across different sectors. So your research will be circulated, and no doubt it will be incredibly valuable. So thank you so much for your insights and also for making that research available. So finally, thank you to all of those of you attending, and thank you for your excellent questions. As you're all aware, Asialink Business is Australia's national centre for Asia capability. We have been mandated by the Australian government to help create an Asia-capable workforce in Australia, and India is one of our key markets of focus. I very much look forward to welcoming you at the next of our Asia Market Update Series events. I'd greatly appreciate it if you could please complete the short survey, which will be available at the end of this event. For those of you interested in all things health and digital innovation in the context of Indonesia and India, I encourage you to join our online event tomorrow, focused on digital health opportunities in these two markets. Details of this event and other upcoming events are available on our website, asialinkbusiness.com.au. With that, I'd like to thank all of you for your participation and wish you all a lovely evening. Thank you.